Indian markets have experienced one of the worst falls today following the global bloodbath, with both the Sensex and the Nifty registering high losses. The global sell-off has sparked the Nifty and Sensex to decline almost 1.5%. Markets have plunged on global cues, triggering a massive sell-off. The Sensex trading below 80,000. The rupee is also weakened to an all-time low, but India is doing relatively better than other Asian markets. Japan's stocks have plunged as much as 7%. My colleague Sakshi Bajaj with the details.
Weak US economic cues and the reaction by US investors fueling a global market sell-off. Now, what really was this weak economic data in particular? Well, worse than expected jobs data from the US really trickled in these fears, recession fears resurfacing, and US investors reacting to that data on Friday. We saw the sharp sell-off on Wall Street, followed by Asian markets plunging as much as 5% on Friday and extending that decline to as much as 7% today. We've seen India's Nifty and Sensex and benchmark indices at large also extend the declines witnessed on Friday. Both benchmark indices sliding over 2%, broader markets also trading sharply lower, investor wealth significantly eroded. Now, what happens when a sell-off like this happens? We also see the impact on currencies. Remember, the rupee also opened at its record low, weakened to a record low after US recession fears resurfaced. Now, asset classes like gold, also remember, gold is considered a safe haven in times of crisis, in uncertain times, and therefore we see an uptick in gold prices. So, of course, an impact on all asset classes as we see. We've seen equity markets plunge. We've seen currency also factoring in those recession concerns, and precious metals rise in trade in times of uncertainty.